Hello and welcome to Fundu Money. Here we will discuss loan against property, their major features, their benefits, and this is one of the most popular loans around. And you would have already come across many advertisements and messages inviting you to have a go and taking loan against property. Now, loan against property is very useful. Loan against property being a loan that's given to you in lieu of mortgaging your property. That's why it's also called a property loan or a mortgage loan. And against the value of your property, a certain percentage is given to you as loan, typically 70 to 80%. That's what a loan against property is all about, and it's immensely useful for a range of requirements, whether it's a medical emergency, which you can obviously foresee. It's going to come in, say, 3-4 weeks. That's something loan against property you might consider. Then, of course, if you fall short of money for your children's higher education, some requirement, loan against property will help you. Then business working capital, it can help you fund the working capital requirements for your business. It can help you retire small and expensive loans, small tenure expensive loans like personal loans, credit card outstanding. They're high cost loans, you can retire them. And because loan against property has got a lower rate, so not only your interest payout becomes lesser, the EMIs are lesser, your impact on the home budget is lesser. And of course, if your credit score has got damaged, it's got lowered, by regular repayment of loan against property can improve your credit score. So we'll be talking about this. So in the next section, we'll be talking about the main features of loan against property or property loans, mortgage loans, and in the third section, we'll talk about the benefits and some of the important aspects of the loan against property application process. We'll be doing that. So before we split for a short break, we would request you to subscribe to the channel and go through our numerous playlists, including various loans against assets. They are present in both in English and in Hindi. And of course, get connected with us on all leading social media networks and subscribe to our channel so that you get to know the latest that's happening here, right? So we'll be back shortly with the details. Don't go away. Welcome back. Welcome to Fundu Money. We're talking about loan against property. In this section, we're going to be talking about the features, and in the subsequent section, we will talk about the advantages, benefits, and some important aspects of the application process. So let's jump into the main features and let's talk about them. So loan against property, you can get this loan for your commercial property, residential property, commercial land, and residential land. So you've got all these options, and you can take a loan against them. The tenure will typically be between 3 to 15 years. So and it can go up to 20 years. But remember, the loans, every lender is going to try and make sure that the loan gets over by the time the borrower is either 65 or maximum 70. So that's what they will be looking at. So that's how the tenure is going to get determined, because the way this loan is, the tenure tends to be longer than some of the other expensive loans like personal loans. So in a personal loan, you won't get this kind of tenure. You won't also get this kind of flexibility. If you want flexibility in tenure, loan against property is what you should be going. If you have the time also, loan against property is the way to go. Then of course, the loans start at 5 lakhs typically. It can go up to all the way up to 5 to 7 crores. It can be even more, depends on the property. Typically 70 to 80% of the property value is given as a loan. So therefore, if you want a large amount of money, loan or money requirement is large, Loan against property is is where you should be heading. If you have a high CIBIL score, credit score is high, you'll get a lower interest rate. Otherwise, the interest rate will typically move between 7 to 9%. For fixed rate, it will be higher. You can opt between fixed and a floating rate. Fixed rate will be higher, floating rate will be lower. Salaried individuals will get a lower rate than self-employed. If you have a co-applicant who has got income, will get a lower rate. The co-owners of any property will have to become co-applicants. Suppose you are the only only owner, then you try to get an applicant who's a close relative. You can do that. A woman can also co-applicant. A lady co-applicant can also get you a lower interest rate. So these things actually help. If you are in a self-occupied property, residential property, you will get a lower rate compared to a residential property which is not self-occupied. So you stay in a place, putting a loan against that property, you will get a lower rate compared to another apartment or another house you have where you're not staying. Right now, commercial property interest rates will be higher than residential property interest rates. So this is something you will have to keep in mind. Then of course, how many, what is the kind of monthly income you have? That might be one of the factors. There would be some minimum monthly income. There would be minimum number of years of business. If you are self-employed, your age, your income, your savings, your financial standing, credit repayment track record, all these are like in any other loan will play an important role. If you are in an existing financial relationship, say with an existing bank, you have got a banking relationship with that bank, you can get a lower rate, interest rate out there as well. Market value and type of property, the market value of the property and the type of the property, would, as we have partially explained, will also determine the interest rate. They also play a role in determining the interest rate. So this is the interest rate. We have discussed the tenure. We have discussed the maximum amounts. Now there are some charges. Okay, so the processing charges there. So it can be 0.5%. There could be upper number limit, say 10,000, something like that, or it could go. The percentage could go up to 1% or even up to 3%. So you need to. This is part of the cost, so you need to evaluate whether you're okay with these kind of costs that are there with the loan against property. There could be other charges. There could be home insurance. They might insist, the lending institution might insist on home insurance. That could be a charge. There could be some statutory charge like a stamp duty. If an external opinion is required for the technical and legal analysis, that charge you'll obviously have to pay. Now the form of the loan, the way you get the loan, you repay, can be typically in two broad forms. One is you pay through an EMI, and that's how you go through it. And of course, you can do it through an overdraft facility like loan against FD. You can take a loan against property and an overdraft facility. But the amount of money that you use, the limit that you use, part of the limit you use, it is on that you are charged interest. This credit limit can be reviewed annually. Every year it can be reviewed. So that could be one of the things. There's no prepayment penalty. If you want to prepay before the loan gets over, there's no prepayment penalty. Of course, if you are paying it very early, say within the first 1 year, there could be some kind of a charge. If you're in a fixed rate and you're paying it very early, there could be a charge. So these are things which are unlikely, but if you think that's something that's on the annual, then do check if there are going to be some charges or not. The processing time for loan against property is going to be more than a loan against FD and gold loan, right? Even personal loan. That's simply because there has to be due diligence that will be need to be done for the property. Now, so if you're in a mad rush, if you're really pressed, this is not the loan that you should be looking at. But if you need a very large amount, then there's possibly no other choice but to look at the property loan or loan against property. So this is as far as the processing time is concerned. Balance transfer can be done if the loan against property has got a higher rate and somebody else is offering a lower rate. You can do a balance transfer, much like a home loan. You can also get a top up. You can get another top up, another loan on top of this loan. And however, like a home loan top up, here also the interest rate can be, and typically is a higher rate that and it could also have a prepayment penalty. The top up version can have a prepayment penalty. So these are some of the things that one needs to know and remember when we are looking at the features of a loan against property. So in the next section, we'll discuss the benefits and a little bit about the loan against property application process. So don't go away, we'll be back very shortly. Welcome back, welcome to Fund to Money. We are discussing loan against property, and in this third and final section, we'll be discussing the benefits of loan against property, and they are fairly obvious. Number one, it's a lower interest rate because it's a secured loan. When we are saying lower interest rate, it's compared to personal loan and credit card, which are unsecured loan. Here you have got an asset. Because of the asset, the lender is feeling more confident. The bank or financial institution, NBFC, is feeling more confident, hence a lower rate. It is also the reason why you can have a whole range of tenures, and the tenures can become longer. So in 15 years, it can go up to 20 years, and so on and so forth. Because of a longer tenure, the EMIs obviously become lower. The interest rate, because it's a secured loan, the interest rate is lower. Of course, as I mentioned, loan against FD has got obviously the lowest, typically tends to have the lowest interest rate, and things can, that's how typically in the spectrum things move. Then of course, if you want a larger loan amount, loan against property is how you will be going. Suppose you want a 50, you want a roughly, you've got a property which is 60 lakhs, and you need a loan of somewhere around a little less than say 50 lakhs. Now this is loan against property is what you should be going for. Now they're typically useful for a whole range of requirements, from children's higher education. There's shortfall in savings for children's higher education. Loan against property is what you should be looking at. There's a shortfall you're expecting because of some medical emergency. There's an operation, hospitalization that's going to get planned, and it's going to be very expensive. You don't have insurance coverage for that, for everything, or maybe there's going to be large overflow. Loan against property is what you should be looking at. Of course, you need that kind of time to get that loan. And of course, apart from that, funding of working capital requirements for business, repaying shorter tenure, expensive loans, personal loans, credit card outstanding, you prepay them through this large loan, through this lower cost loan, and your EMIs come down, your pressure on your budget, home budget comes down. So that's something that you can look at. The other benefit, of course, is there's no change in the ownership. You continue owning the property. There's no prepayment penalty. They could do those one or two things that we mentioned that you need to keep in mind. We mentioned them in the previous section. Apart from that, you can use the interest payment if you're using this loan against property to fund your working capital or business activity. Then of course the interest can be claimed as a tax deduction under section 37. So that's pretty much some of the benefits. What you need to do, you need to see how the rates compare while taking a loan against property, scouting for it, how the rates compare, how the charges compare, does your financial standing, can you manage that loan, what's your income. You can calculate the EMI, check your the rate, the charge, what it's going to cost you. You find out whether you want to take a floating rate, fixed rate kind of thing in terms of what is manageable, and of course you get a co-applicant. Now, in the application process, it's absolutely the same as most other loans, especially home loan. You have to establish your identity. The applicants have to establish their identity. So you've got PAN, passport, driving license. You'll have to establish where you stay, the property and where you stay, passport, electricity bill, Aadhaar card. Those would be the things, and of course income proof. So it will be income tax return, pay slips. If it's your self-employed, then audited balance sheet, income statements. Then there could be certificate of practice, qualification, civil score. Those would be required, and most importantly, you will need to give property documents, because that's what is getting you the loan. So we hope you found the three parts useful of loan against property, or property loans, or mortgage loans, and we would encourage you to go through our other presentations, including loan against property presentations in the past, which are there in the playlist. Those links are given in the description section and also in this presentation. So if you've liked this discussion, hit the like button, share it with others, and subscribe to our channel. Wait for our next presentation. Take very good care of yourself. Till the next time, take very good care of yourself, and goodbye.